Today, our stock analysis will focus on the semiconductor company Intel, ticker INTC. The company has been struggling over the past few years and falling behind competitors like Taiwan Semi and Nvidia. But we'll look at where the stock is trading and if it appears to be a buying opportunity. So let's take a quick minute and look at their financials first. So jumping right into it, we can see a good amount of red, which signifies year-over-year declines. And for revenue, this has happened for 2 consecutive years. And for 2023, it's the lowest over the last 10 years and down about 30% from a high in 2021. But an even more concerning data point is net income, having multiple years of declines and 5 consecutive years since 2019. And again, 2023 being the lowest over the prior 10 years. Then next for earnings per share, having the same trend of consecutive declines, this time for 3 years running. And once again, 2023 being the lowest over the past decade. Now, these three data points are showing up not only in their stock price, which has been on the decline for the past few years, but we can see here for dividends, taking a significant cut in 2023, down about 50% from 2022. And this is not a good signal to investors when a company like Intel needs to cut their dividends. Then shares, did have a good run from 2014 to 2021, being on the decline. But past 2 years, we can see here, the share count has been increasing. But I guess the only positive note is 2023 is still lower than it was 10 years ago. Then finally, free cash flow. Once again, 3 consecutive years of declines, but not only that, 2022 and 2023 both being negative. So again, another big concern. So these past few years are very concerning, and hopefully Intel can get things back on track. The U.S. is looking at producing more chips here in the U.S. with the CHIPS Act. So as that matures, hopefully Intel can benefit and improve on their financials. But next, let's jump down and perform a stock valuation. Here's the valuation setup, and we will look at a few other scenarios. But first thing to point out here is up in the top right, when we looked at the financials, net income CAGR and earnings per share, we see there's negative. Last 2 years, net income was negative, so obviously these are going to be negative. So we have to come up with a short-term growth rate, and we know Intel hasn't been performing well. So right now I'm using a 4% short-term growth rate over the next 10 years. So that 4% is slightly above the Fed's goal of a 2% inflation rate. So going with 4% for their growth rate. And then long-term growth rate after the 10 years, we're going to use 3%. And because I do feel it's a little risky, my margin of safety, 75%. I have questioned maybe dropping a little lower to 70%, but for this case, we're going to use 75%. So our intrinsic value comes out to $29.89, and with that 75% margin of safety, comes out to $22.42. So the stock price is trading slightly above $30, maybe somewhere around $30.60 or so, or slightly below $31. So we can see there just below the intrinsic value. But if you think Intel is going to be able to turn things around in the coming quarters and coming year or so, and that 4% short-term growth rate is on the lower side, let's tick that up to 6% and see how that impacts our valuation. Okay, 6% short-term growth rate, intrinsic value jumps up to just below $35, and with that 75% margin of safety, brings it down to $26.23. So the current stock price, as I said, is trading around $30.60 or so. So you will be getting some value here, though you're not going to get quite a bit of a margin of safety. I would still lean towards trying to buy this in the mid to the high $20 range at the very least. I still think there is some risk with this company, and based on their recent earnings call, they don't expect things to turn around until at least the second half of this year, and that's probably being optimistic. So you may be in for another quarter with some poor results, just like Q1 of 2024. Results weren't that great either. But let's look at some other data points here. First, the PE ratio, just above 32, but as we saw in the financials, this is coming off our earnings that have been lowest over the past 10 years. So if they are able to turn things around, this PE ratio really isn't justifying how the company should be valued at. And then long-term debt to free cash flow, we can see it's negative. This is because free cash flow was negative, not just for 2023, but also 2022. So that is a concern. They definitely need to get their free cash flow back to the positive. And then dividends, so they are down. We did see from 2022 to 2023, they were cut about half, but from 2014 it is down, not as bad, down about 18%, but still, you never like seeing a company cut dividends. And then the dividend yield 1.6%, so that's not that great. Shares, shares have been on the incline for the past 2 years, though over the past 10 years, we can see it is down almost 17%. And then net profit margin, I typically like seeing 10% or higher. And this is actually one of the better signs over the last 10 years. The average is over 20%, and the last 3 years, 13.65%. So at least that is a good sign here for Intel. And one other data point I always like looking at, return on invested capital. We can see going back 10 and 5 years over 10%, which I really like seeing. But more recently on the decline, 3 years, 7.1, and the 1 year just over 1. So they really need to improve on their financials, get these metrics up. As for me, I will be holding off investing in Intel. I'm sure there is definitely a turnaround story for Intel, just not sure when that's going to happen. And right now at $30, I think it's a little too high for me. I like it to get down probably in the 20s, maybe mid $20 range potentially. And if not, a lot of other investments out there for me to put my money into. But let's move on and look at how my portfolio is performing next. Here's the portfolio's overall performance, and let's look at Intel's competitor, NVIDIA, NVDA. They had a great earnings call the other day and announced a 10-for-1 split happening in June. And since buying into this stock about 2 to 3 months ago, it has given me a nice return so far. Not sure if I'm going to add into the position at this point, but I will be considering it. Next, Google, another stock I bought into earlier this year when they were struggling, but they've been able to turn it around over the past 2 months or so. So looking good for Google now. And then my home builders, Toll Brothers, TOL, and Pulte Group, PHM. They have given me a great return over the past 2 years, and I expect that to continue for at least another couple of years. And my newest investment, Builders First Source, BLDR. They're a building product supply company, and I'm looking forward to see how they perform moving forward. And lastly, we'll look at Tesla. It's been down since I bought into it again earlier this year. But we'll see how everything goes following their August presentation on the robotaxi and if that can get the market excited for the company's future. But I thank you for watching this video. Hope you got some useful information. If so, consider subscribing. Hope to see you next time. Thanks for watching.